We have less than 0.5% of anyone's investments altogether in natural resources, which includes precious metals and precious metals related equities.
SPDR exchange traded funds, the SPDR Gold ETF, the ticker there GLD, and the SPDR S&P 500 ETF, the ticker SPY. You look at the ratio between those two, and it has just taken a beating. And this particular comparison doesn't even include dividends because, of course, you get those on stocks, not on gold. If you were to have those in the equation, you'd be talking record lows for the gold ETF.
Interesting reaction here. We're seeing a counterintuitive trade, actually. They're selling gold at the same time. You're seeing the equity markets have a bit of a temper tantrum as they didn't get enough from the Fed.
Now, the key to surviving in this situation is to have gold and silver because they will be sought by anyone who wants to have some stability, who wants to preserve the real value of their wealth. So gold and silver are vital, and you can use gold and silver to acquire the assets which you need or you decide that you may need after the dislocation is over. I mean, a dislocation may last. I mean, if governments continue, the dislocation could last for some time. If, on the other hand, governments stand back and can't do anything about it, and people sort it out themselves, then I think the dislocation is an 18th month wonder, no more than that. What emerges as credible currency after that, of course, is a completely different subject. But until that bridge is crossed, then gold and silver are the only things that you can really use, which will be recognized as money by anyone else. It's the unwinding, if you like, of Gresham's law. They'll come back into circulation.
The one thing I wanted to follow up with you about is this sense that I've gained as a retail bullion dealer over the last month or so, especially the last 2 weeks, anticipating. It seems many people calling me are anticipating convulsive events this month, October, this quarter, next quarter. It's as though this pressure that's been building for years, as we've been speaking for the last half a decade or more, is coming to a head. And what I'm trying to report is that it seems to be getting more mass awareness and this sort of grassroots concern on the part of ordinary people. Now, Rick Rule, who we interview often, reminds us that still now, today, we have less than 0.5% of anyone's investments altogether in natural resources, which includes precious metals and precious metals related equities. So still, the popular mindset is 99.5% not wakened yet. But I'm just seeing of the 0.5% who are calling me with increasing frequency that people are urgently concerned about what's about to happen, what's about to come. A lot of what you've talked about are major themes that are coming to a head. You even use the terminology, we're seeing it play out now. Any reflections you may have on this popular awakening? Because you've talked with us about that for some time. It's like when the common man on the streets realizes it's not prices going up, it's the currency being destroyed in his own pocket, in his own bank account, etc. So can you give us your perspective on this mass awakening that seems to be this mood shift, this popular awakening seems to be happening?
Yes, I mean, I think it's very much early stages. I mean, you and I will talk to like-minded people, and so we will see this, I think, before it's more evident in wider circles. But that said, certainly this is the beginning of the end, if you like, of fiat currencies. I have no doubt about that whatsoever. And the thing that is so important in this is to understand why interest rates are going to rise and why interest rates are going to undermine financial assets, and why, by continuing to rise, they will also undermine physical assets. And we're talking about everything from residential property to the values of businesses and so on and so forth. I mean, even the values of things like farmland, you sort of think, well, when the world comes to sort of an end, if you've got a farm, you're okay. Well, maybe if you know how to farm, but the value of farmland in this situation, I mean, that goes down as well. Everything goes down. I mean, some things more than others. Some things go to real zero. It's a process that is beginning, as I say, and I think the next stage in it is a more wide understanding that there is something wrong with the money. I think that's the next thing we need to watch out for. I mean, as you rightly say, people are uneasy, but they don't really know why. So it's an education process, and I think it's a self-education process which is evolving. But of course, the other thing about October, it's the anniversary of the October crash. I mean, coming up this week, literally, or next week, because I think it was October the 14th, 1987, the whole thing fell apart.
I thought you were talking about 1929. Now you caught me up. Okay.
Well, you got that as well, yes. And the other thing about 1987 is that, if you're really of a suspicious or superstitious mind, in years, it's a Fibonacci number. It's 34 years since it happened, So, Elliott Wave people will say, well, it was going to afterwards they'll, not before necessarily, but afterwards they'll say, well, of course, it was absolutely on the button, 34 years, Fibonacci number. So you can see that there's a bit of mythology that you can feed into the uneasiness that there is around at the moment. And I think that will develop into increasing knowledge. And one of the things that I think is making people more knowledgeable about money than at other times this has happened, I think, is the invention of cryptocurrencies. The whole reason why you run out and buy Bitcoin or Ether or whatever it might be is because you understand that there is a limited supply of Bitcoin, like it's capped, yet you understand that central banks will print as much currency as they want. There's no limit to what a central bank will do. Therefore, the price of Bitcoin measured in the central bank's currency has only got one way to go. It goes up. And we've seen it go from, 16 cents to, currently, I think, at the time of speaking, something like $53,000. I'm not going to comment on whether it's money or whatever, but the main point about it is that it has educated millennials about money, at least to some degree. And that's the important thing. And I think what it means is that the awakening of people about what's going on and where it is going is likely to be more rapid than it would otherwise if we hadn't had cryptocurrencies. And the other important thing, I'm sure this is a question which will be in your viewers' minds, and that is, aren't central banks going to replace a failing currency with a new digital currency? Well, the problem there is that, there are many problems actually, but I mean, one obvious problem is that before you introduce a digital currency, you've got to be very careful how you do it and why you do it. And you've got to be really sort of confident in the technology. I'm talking about a government department now thinking this. You've got to get it through all the committees, you've got to get it through the politicians and all the rest of it, and you've got to satisfy them. And so this is not something that can be done as an emergency operation.